many years from now, would you be willing to trade all the days from this day to that for one chance, just one chance, to come back here and tell our enemies that they may take our lives, but they'll never take our freedom?
Welcome to Anti-Tyranny News Radio here on UCY.TV. Thank you for joining me this evening. I'm going to be diving into the news here. I did want to kind of start off with the Ron Paul Liberty Report. And give me a second here while it loads up. And, you know, how I've been looking at the economy, and we've seen that there was one on Drudge Report about the GDP and it being flat, basically. And I kind of want to get into, you know, this whole thing, you know, we have, you know, wages going up, you know, the minimum wage, and which causes everybody's wage to go up in that area, and then people to also be laid off, and then prices of things go up. So what does it do? It knocks part of the middle class back down into poverty. We have situations where we're over-regulated to a point you can't, it's hard for anybody to start up a small business. It takes quite a bit. And, you know, of course, that also depends on state and local, you know, government. But, you know, one thing a lot of people don't talk about on mainstream media, one thing is, well, the Federal Reserve, the monetary policy, and it's one of those things. I can't believe that, even though, you know, in the alternative media, monetary policy is brought up a lot, it still is not addressed at the, you know, mainstream level. And it's something that they constantly have the same talking heads from the Federal Reserve on, and usually the only time you did see anybody on there arguing it and being accurate with their arguments was Ron Paul. Well, here's a Ron Paul Liberty Report. Ron Paul, I'm sending a message to Paul Krugman. And I did want to kind of get into this, so let me cue this up here. Here we go.
Hello, everybody, and thank you for tuning in to the Liberty Report. Today, I'm sending a message to Professor Paul Krugman. The reason I'm doing this is he wrote an article recently that got my attention, and in a way he started calling me names, and nobody likes to be called names. He started off with the title. It says, "The Old Man and the CPI." Nobody likes to be called old. I certainly wouldn't like to be told that I have old ideas, and that to me is the most important thing. But he starts off with the title, but then, actually gets a lot worse after that. The whole idea that he had was that he had to discredit me one way or the other. One thing he did early in the article, which really surprised me, and Professor, I don't think you really meant this in a nasty way, but comparing me to Bernie Madoff, I don't think that's quite what you wanted to do, because here you are, you're a well-known professor. You write for the New York Times, and you have had won a Nobel Prize, and then nobody's going to believe you that there's a similarity between Ron Paul and Bernard Madoff. But that's your problem, not mine. But then you go into some other names, which really is a bit of a surprise, too. They just don't to be gentlemanly about talking, academically speaking about ideas. You call me a crotchety crank. And I don't believe I am that way. I think most people compliment me as not being cranky and having a lot of fun in the world of ideas and presenting the cause of liberty. But that I can understand and I can tolerate, and maybe you were doing it in jest or whatever. But it did annoy me when you started attacking supporters of mine. Now that's when you're really getting me disturbed. So if you were trying to get me upset, you were coming pretty close to it when you said the supporters were crotchety old white guys feeling cranky. White guys? And then you further go on, when you mentioned white guys, you said, you're going to further explain that. And I thought, boy, what's he going to talk about white guys? And it is he talking about racism or what is going on? So he goes on and explains that he condemns the white following because so many of the supporters I have, including myself, that we don't believe in forcibly redistributing wealth. We think if people earn wealth, they have a right to keep it, and that's what made America great. So therefore, we're very much opposed to the redistribution of wealth. So he interprets the redistribution of wealth only helping poor people get food stamps, and that we're opposed to that. So that's why we're racist. We're white people who are opposed to it. So I wonder what he thinks when a black person earns money and would like to keep it and have low taxes. Is he a bad person then too? I don't think so. But he's arguing that if you argue against welfare, then you're racist. Professor, if you check the statistics, you will find out that a lot more welfare go to the wealthy than to the poor. The perfect example is how the Keynesians, your crowd, your MIT people, took care of the recession by printing more money and spending more money and passing it out, bailing out the banks and bailing out the corporations, massively expanding the one percenters' wealth, at the same time adding to the destruction of the middle class. So this is quite a bit different than what you're referring to. Self-reliance shouldn't be a bad word. To say that a person, I want to take care of myself, I want to work, I'd like to keep what I earn, and I'm not going to be dependent on the taxpayer, that is not an evil. Just think if everybody did that, we wouldn't have the problems that we have today. Because when the mischief makers get involved and think they can run the economy, the central economic planners exist, and the monetary managers, of which you're one, the results are not your goals. So I will never question your goals. I've worked with a lot of people that believe in what you're talking about, and they're not bad people because they want to help people. They want to help the poor. And so the poorer the society gets and the smaller the middle class gets, the argument is always spend more money, have more programs, and yet never addressing the subject that printing money doesn't help, It helps the wealthy and doesn't improve the situation. I think that we should have a better conversation on the economic policies, and you did even mention that in your article. And one criticism was that you wanted to downplay the importance of monetary policy. You know, that's not that important. It doesn't cause inflation. It doesn't cause big government, and you don't give away money, and you don't print money, and all this sort of thing. He says you explained it as being a technical tool in the management of the economy. Well, if that is the case, it's doing a lousy job. And I'm going to have some charts up here in a few minutes, some charts to emphasize my point that I'm making, that the failure of Keynesian economics is loud and clear. And I believe that's one of the reasons that you have become interested in addressing my issues and what I'm talking about, because it doesn't make any sense. Why would you bother writing articles about me, a major article, and using bad language and calling me names? You know, I was in Congress a good many years. I never passed any legislation. I wasn't a major advisor. You claim that you're part of the MIT crowd that really can run the show and has done such great things, and you have the MIT people all scattered all about playing a significant role in this. So I don't think that I deserve that much attention. But for some reason, you're giving it to me. So I'm trying to figure out, why would you spend this much time? I know you get paid for it. You have to, spruce things up, and you have a podium. You have the New York Times, even though the number of people reading the Times, the numbers are going down. But anyway, you are determined to continue in this effort. But I'm just really amazed. In some ways, I think it's a compliment. Why bother? I don't even have a post office named after me. And so far, Obama hasn't called me for advice. And I know you have been called by President. And besides, you have a Nobel Prize. So everybody must think that you have all the answers. It's just that there's a few of us that don't quite buy into this. Because there are some of us who still believe that debt is a problem. And you've taught your students that debt isn't a problem. Don't worry about it. We think spending is a problem, that we spend too much money by the government, and then there's no money left, for the people. And we talk about this seriously. So there are some disagreements there. And the one thing that could help, let's say we were serious about communications, and I've always been serious about it because there were a lot of good friends in Washington and Congress who called themselves progressives, and we would come out and with our agreements and show them where we're in agreement, a person like Ralph Nader and others, and say, yeah, we agree on civil liberties and we agree on a foreign policy. We disagree on some economic problems. But the one thing that we could sit down and talk about is why I think some of this stuff sounds like demagoguery when I listen to what you say, is I don't think you have the vaguest idea about Austrian economics and the definition of inflation. Because even in your title, you indicate the CPI. Sure, I talk about the CPI, but I also have an understanding of why the CPI is not sacred. First, it's fudged. It gets changed when it's going up too fast. We do know that the current CPI, if you use the old standards, will be going up at probably 4% instead of 2%. So we could stop for a minute, and what I would like to do, if we ever had a real conversation, I would say, Professor Krugman, what is your definition of inflation? And I think you imply that inflation is the CPI, and there's no inflation. So therefore, who are concerned about the monetary system and too much money being printed, you're completely wrong, because the CPI didn't go up. But there's a couple things. When you talk to Austrian economists, when you talk to free markets, an economy that's not run by authoritarians and not run by people who think they know all the answers, they would say that we don't know what the money supply should be. and we don't know what the interest rates should be. But you do, because you're an authoritarian. But Austrians define inflation as expanding the money supply. And you can't deny, and I'll show a chart here shortly, how the money supply has expanded since 1971, since we severed the last link to gold. It's been massive. So if we have an understanding, you just can't demagogue it and call us names. You have to say, well, inflation is only counted by the devaluation of the dollar through inflation, and the CPI measures this, and we compensate and we raise Social Security check. Well, I will show a chart that shows that, the real wages don't actually respond to this. We, in the free market camp, define inflation as the increase in supply of money. The CPI can go up. We have no pretense that we know when it's going to go up, and that value, whether it's interest rate numbers or our cost of living, values are determined in the marketplace in a subjective manner and not by one of your calculations and have a mathematical formula like if government and the Federal Reserve does ABC, you're going to have CDF exam results. We don't believe in that. We believe all that Mickey Mouse with your very, very complicated mathematical formula. I think most people are laughing at that because they're never right. They never predict anything that's right, even though you're saying that you have been correct here recently, that we've came out of the recession of 08, 09. But talk to the middle class about it. They're not out of the recession. They're in a depression. And the real reason why I think you have to downplay what I've been talking about is not so much me, because I'm not eloquent enough or powerful enough to be bothered with, but those who can teach and reveal what free market economists really believe in and how it works. It is better understood today than it has been throughout history. We're not talking about Adam Smith and other people, and we're not talking about authoritarian economics. That's what you're talking about. Authoritarian economics, where the government runs things, that's been around for thousands of years. And we don't want that. We want the market to work. We want voluntarism. We don't want people coming down with dictates from the government. One time I asked Chairman Bernanke about the definition of money. Was it gold money? He said, no, it's not money. And I imagine that you would agree with that. But a Federal Reserve note, that is money. By fiat, by declaration, by mandate, by law, the government can make paper money per se. And we don't believe that is the case. Sure, it might work for a while. There's been a lot of paper money around the world. But you should know monetary history better than this. Paper money never lasts. And when I called that up to Chairman Greenspan, he said, well, things are changing. We are better managers now than ever before, and we can do it. We are smarter than ever before, and we can dictate paper to be money, and we can say gold is not money. Well, you and I talking about this will not solve this, that we cannot do it, because time will take this. The market will prove this. If I'm absolutely wrong in 10, 20, 30 years, everybody will know I was absolutely wrong. But if it turns out that this system has to be revamped, and it may be revamped a lot sooner than you're suspecting, unless you're worried about it and you're covering yourself, that the market will tell us. But there could be another reserve currency. There could be another currency come in with metallic backing to it. This is usually the way they get out of monetary problems, by restoring confidence. But we have a long way to go, because most people are not very confident in what the government tells us. But I want to go into some charts now, because I know professors like charts, and I love charts, even though it's just as a moment of history, and you can look at history from it, but you can't predict the future. But I want to use the charts in many ways to make my point. The first chart we're going to look at is the money supply. It's M2. Now, it's hard to pick the best measurement for money supply when there is no definition. Nobody knows what the money supply is. One time in the 70s, when I asked, I think it was Paul Volcker this question, I said, how can you manage the money supply when you can't define it? Because he wasn't able to define it. He didn't know whether it was M1, M2, the monetary base, old silver dollars, gold dollars, what. I said, how can you manage something you can't even define? Well, that's a pretty good question. Anyway, I picked M2. Most people know about M2. What I want to show here is that money has been created in a wholesale manner since 1970, when the link to gold was severed. And you say, well, that's good. And that's why we had such great economic growth since that time. But you see all those gray lines, those are all recessions going on. And but you can see dramatically down there about 1971, this curve is very, very sharp, and it's going to continue. It's not going to decrease. Now, if there was such a thing as deflation, that line would turn down. But it hasn't. Prices might not be going up as fast in the CPI for certain reasons. The money supply is going up. We still have a lot of inflation. And the other thing about that is sometimes you can have a lot of prices going up and they're never in the CPI, such as rents right now. They exclude rents, and rents are skyrocketing. Education skyrocketing, but that's not inflation. That's just something else. It's the CPI that we have to watch. Now, I want to go on to the next chart, which is a reflection of the increase in the money supply. And this is an index started way back in 1775. I mean, long-term history about measuring prices. And they started off in 1775. 1 was the baseline for prices. And you see the blips along the way on the bottom of the screen, and those are the wars that we fight and different things. But they're very, very small blips. But then we see when the Federal Reserve came in, the dollar then was backed by an ounce of gold at $20 an ounce, and we immediately inflated for World War I and World War II. But there was still some linkage to gold. But then that was given up in 1971, and look at what happened in 1971. Tremendous increase in the CPI. And you'll say, Ron, no, that doesn't work because the CPI is hardly even moving. Well, Professor, you have to realize that the CPI doesn't tell the whole story. That is used for fiction to try to fool the people, and even used to fool the markets because everybody's looking at it, so it even affects the markets, and they can do this. But anyway, money supply up, CPI has been up, and now the next chart I want to go to is, where's all this money going? Well, it's going to help the people, right? Because that's what we want. And actually, I believe, Professor, that you want to help the people. I want to help the people. I don't think either one of us deliberately want to impoverish the people. So taking a look at this chart, we see that total spending since 71 has gone up 287%. Well, just think of all those good things we're getting, from the government. We get to spend that money on wars, go around fighting wars, and your argument is that all spending is good for the economy. Sure, go over there and bomb a bunch of people, pay a lot of military personnel, build tanks, blow them up, blow up bridges, and then rebuild them. That is where the money goes. It's not going to the people. Going to corporations, the military-industrial complex, they do quite well. The bankers do quite well. The financial services, and the government and the 1%ers are in that crowd, and they're doing quite well. But take a look at that bottom line. That's very, very flat. And over all those years, it was only up 24% for the median household income. That's a lousy job. And the MIT gang's been in charge all this time. But you'd argue and say, oh, yeah, but they didn't do it quite the way I want. I would do this a little bit differently. And this doesn't mean anything because they didn't do it quite right. They didn't print money quite strong enough. And most of the Keynesians now, including yourself, said that The only thing that we have to do is never give up on inflating the currency like they did in the 30s, because in 37, when the Fed raised the interest rate, they restored the recession and depression. And so everybody's terrified of this, and this is one of the reasons it's going to be real tough for the Fed ever to deliberately raise interest rates. But that line tells you what happens. The money goes to the government, to the special interest, and what does the median household income? It stays very flat. And guess what happens to the middle class? It continues to expand massively. The middle class is shrinking. And there's a large number of people now that are not employed fully, full-time employment. Even though the unemployment statistic is low, there's a lot of unemployment that is not full-time. And this is one of the reasons the middle class is so upset. And another reason they're upset is they're broke. And they have inflation to deal with, and they can't pay their bills. If there was no inflation and the income was even going up modestly, they would be happy. But it hasn't adjusted. The people who are getting Social Security are not happy. But the Keynesian answer is send them a bigger check. It'll help. It'll solve the problem. Well, I don't believe it's true. And I want to go to the last chart, which has to do with the stagnant real wages. Here we have bigger paychecks. You see the line down at the bottom from 1964. It went up nearly tenfold. Oh yeah, we're making more money. We're not making $2.50 an hour. We're making $20 an hour. But what about the standard of living? Has this helped the middle class? No, it's destroying the middle class. And look at the line across the top. That's real dollars. And that's not too hard to to calculate. 2014 dollars, flat. And that's over a long period of time. And there should be no question about why people are unhappy in this country. Then also, one tool that you would use, Professor, often is to say, well, it's all the Republicans' fault. The Republicans did this, or they wouldn't do this, and this sort of thing. Well, that is not the answer, because obviously when you throw that out at me as an accusation, sure, I was in the Republican Party, but I probably 95% of the time voted against them because they were voting just like Democrats, and they were run by Keynesian economists, the people who believed in this nonsense. So I voted against them all the time. So to say that it's a Republican function and not recognize that the important issue is what is the economic philosophy, and this is where you brag about it, the economic philosophy of the MIT gang and how important they were. But what are their answers for this? Where is the middle class? And if you say, well, we didn't get to do it the way we wanted to do it, well, you've had a lot of years to try. You've been trying since the Depression, and every year you're expanding it, and it's not working. So I think that the handwriting's on the wall. The authoritarian approach is anti-liberty. That's my biggest beef, because that's what I want. I want voluntarism. And the one thing that would have to come to understand, any of those who would be running the government, is where the really deep flaw in Keynesian economics is that that you can't make these predictions. There's no way you know what the money supply should be. There's no way that you should know what the interest rates should be. It's distortion. Free market interest rates are so vital and crucial. So you can't deal with this unless you talk about not the CPI. You need to talk about the malinvestment. You need to talk about the bond bubble. If you want to see an inflation bubble, go look at the bond bubble and see what's going on there. The credit in a system like this is a false and it's an illusion, because it's going to cause people to make mistakes, and you can't know what is right. The big difference between what you as a professor and the Keynesians teach is that you believe you can know. We are more humble as Austrians, free market people. We claim we don't know. what the people want. We claim we don't know what the money supply should be. We know that the interest rates should be determined by the market. And, you know, the road to more knowledge, I think, is the first admission of what we don't know. Austrian economists are quite capable of admitting what they don't know, but what they do know so far has panned out to be correct. And right now, there's more need than ever for Keynes. There's more need to have free market economics and understanding that what we've had doesn't work. And the day will come, the opportunity is there, because this system is failing. I think that is the main reason you are so concerned about any message getting out. So I believe that very soon we will have a ramification of all that's happening. There will be a chance to make a decision. But the biggest thing that we should be worrying about is the welfare being of the middle class, and economic intervention, inflationism, debt, and wars. That is the cause of our problems. The answers can all be found in a clear understanding of what liberty is all about, why we need property rights, and why we should continue to keep this principle that self-reliance shouldn't be punished. It should be rewarded. You shouldn't punish people for saving money. And yet Federal Reserve officials have told me quite frequently that, yeah, they don't get any interest anymore with people who save, but that's part of our planning. We can't do much about that. On a free market, it wouldn't be like that. So let's hope that there would be some reconciliation someday on the acknowledgement of the failure of the system that we have, and not to blame Republican free marketeers for this problem. That just doesn't hold water, because the Republicans are just as Keynesians as the Democrats. Anyway, I thank you for all the attention you have given me, Professor Krugman. I've gotten a lot of comments. I was surprised, even on the New York Times, he wrote some favorable comments in there. So I don't know. I think you probably have to try again and explain all these problems that I point out, and why the middle class is suffering, and what you're going to do with it with more economic planning. Anyway, I want to thank everybody for tuning in today to the Liberty Report, and please come back soon.
Ron Paul, Liberty Report. Now, to kind of dive into that, because, you know, we're talking about the Fed and the bond bubble there, and I have one here that's from Yahoo News, found it through Drudge Report. Who needs the Fed? The rate hike cometh on its own. Says here, New York Reuters, as traders, market pundits, and economists jaw over whether the Federal Reserve this year will lift its benchmark lending rate for the first time in almost a decade, several corners of the U.S. bond market are not waiting around. A wide range of short-term interest rates, which tend to be the most sensitive to Fed policy expectations, has been quietly grinding higher for weeks, or in some cases much longer. Several have even surpassed their levels of 2 years ago during the bond market's taper tantrum, when prices dropped steeply and yields shot up as the Fed pondered whether to halt its massive asset purchase program. Banks, money market mutual funds, and other investors do not want to be stuck with low-yielding debt when the U.S. Central Bank finally does begin raising interest rates, something it lasted in June of 2006. Generally positive comments about the economy by the Fed at the conclusion of its latest policy meeting on Wednesday signaled to many that the rate rise could come as early as September, which I've been warning people. The confidence is starting to rise about a rate hike. And remember, this is the Fed commenting about how good the economy is. Now, people that are actually in the industry know that it's been flatlined for at least 2 years. Our economy has been flatlined. No matter what the numbers say, people in the factories, the manufacturing, definitely the smaller factories, not, big corporate GM or something, but, the factories that are producing for national and international, but, a little bit smaller, not these car companies, for one, because they just keep producing no matter what. Um, they have slowed down a little bit during the recession, but for the most part, they continue for a while. And but you look at all the other factories; they really been stagnant. Um, I know a lot of factories are producing stock when normally they're producing orders, meaning they don't have orders. They're hoping for orders. Therefore, to keep their employees working, we'll run stock. That way, we at least have that. If orders do come in, we can continue to run. Now, that's not saying that they're hurting. It just means that they know that companies are watching what they buy. They're not, overbuying anything. Meaning, you get points where, they're not buying because not they can't anticipate a lot of purchasing. And if you kind of understand where I'm going with that. So, the customer's not purchasing as much. They're kind of waiting off on buying things until they absolutely need it. Meaning the seller isn't selling unless it's someone that needs something. Therefore, they don't overstock anymore. Meaning the factories are usually kind of overstocking. Meaning the economy hasn't picked up where the purchasing is going on to relieve any of the stock to get into more of a production. Producing to sell, not producing to store, producing to store. And so you have the Fed saying the economy's getting better. You have the mainstream media talking about the economy getting better and people out on the street going, this is, everybody's talking about the economy getting better. And of course, we have the small inflation in home pricing going on, I've noticed in a lot of places, where prices have gone up on real estate, even though people really don't have the money. They're not getting paid more for real estate to start going up. So you have that going on, and it just, the people out there working are kind of going, what am I supposed to do? My wages aren't going up, and, which I'll get into wages here in a second, but, they're like, wages aren't going up, but home prices are. Now, the homes that I was looking at that were possible are now in the price range that's out of my reach. But it's because we're being told by mainstream and the Fed that the economy's doing better, by the government that the economy's doing better, but it's not. And again, they're saying it, but people aren't seeing it. But it says here, the confidence is starting to rise about a rate hike, said Gennady Goldberg, interest rate strategist at TD Securities in New York. You want to be compensated for at least one hike. For example, overnight bank borrowing rates have been inching up for the better part of a year and are around 36% more costly than in May of 2014 when they fell to a record low. Yields on investment-grade corporate bonds are holding near recent two-year highs, and the premium paid for holding them relative to treasuries is the steepest since September 2013. And even as yields on bond market benchmarks such as the 10-year Treasury note and 30-year T-bond have been only intermittent upward pressure, those are shorter dated treasuries are decidedly higher. The yield on 2-year Treasury notes at 0.73% on Thursday was just a tick from a 4-year high and more than 3 times that of May of 2013. Rates on T-bills with durations of less than a year are at higher rates so far this year. Basically, interest rates across the board are going up even before the Fed has raised interest rates. So what's the signaling? Well, kind of what I talked about before. We have a push for higher minimum wage, which people don't understand the inflation that goes along with that, because once the minimum worker wage goes up, then the higher level jobs have to go up too, which usually in those circumstances, some of the lower people are let off, so some people lose their job. And then the prices of the products go up. Because remember, these people have to, in a business, you have to anticipate future prices and costs and everything. So, of course, they're going to try to minimize as much as they can because they don't know what the market's going to do and how it affects them in the actual free market. So they're probably expecting, well, if I got to let go of people and I have to raise wages for all my employees that are left, I have to raise prices. That means that there's going to be less people. So that's another reason to raise the prices on some of the food for the people that can't afford to go out and eat a McDonald's sandwich. They'll be able to pay for their overhead. And you take that along with higher interest rates, then the Fed goes and raises their interest rates. That means the other interest rates are going to go even higher. So then you just have basically a shitstorm in the economy that you might see a small bubble start to occur, but when that bubble pops, which I don't even know if our economy, being the way it is, could even create another bubble. I guess if you can convince enough of the populace to believe and it's true, you might be able to create something. But you know, I do see a lot of people hurting right now, and interest rates going up are not going to help them out. They're hurting to get paid enough so they can afford maybe a house or a car or to fix their house that they're paying a mortgage on. And then you want to raise interest rates on things so those people that are looking to get a house or maybe looking to get a loan or refinance or, you know, anything are being put in a situation that any type of loan or any type of interest rate on things is just, it's going to really hurt people in the middle class, the medium and lower middle class. And we've already seen that big division, and people are like, yeah, but we did have quite a few people go higher rather than drop into the poverty level. So that was a good thing. Well, those higher people really didn't go crazy high, so they're like the last of the middle class, really. They went from maybe being middle or lower middle class and went up to the higher middle class. But they'll be knocked off if things like this happen. And it's going to happen. But will all the chips fall at the same time? We don't know. One other thing that plays into that is the petrodollar, which I've talked enough about that. I'm not going to go into that right now. But one thing that was also talking about is wages. And I have one here. Let me find it. Right here. This one from Reuters. U.S. wage growth breaks in second quarter. Consumer sentiment slips. U.S. labor costs in the second quarter recorded their smallest increase in 33 years as workers earn less in commissions and bonuses in what appeared to be a temporary wage growth setback against the backdrop of diminishing labor market slack. The surprisingly smaller rise reported by the Labor Department on Friday did little to temper expectations that the Federal Reserve is set to raise interest rates later this year. Like I said, the actual market is stagnant. Yet, we're told it's going up. The economy is going up. When a lot of the workers are feeling the crunch of already interest rates going up, not at the federal level, but the other interest rates, bonds and all this are starting to go up. The job market fast approaching full employment. No, it's not. When they say full employment, they don't mean full employment. What they mean is less people on unemployment. Well, that just takes time. Unemployment runs out, and then when the last of the companies that are failing finally close their doors, and then those people finally get off unemployment, guess who's not being counted anymore? Or, oh yeah, all these part-time workers that used to be full-time workers, people that are working two part-time jobs, making way less than what they were making working one full-time job. And a lot of times those two part-time jobs are more hours than that one full-time job was. Not counted. Labor market fundamentals are improving. Job openings are at record highs, and job openings are at record highs. Well, yeah, a lot of part-time jobs are definitely there. Everywhere that's part-time, gas stations, things like that, they're hiring. A lot of gas stations are hiring. They can't keep people in there. Third shift, second shift. Where was I here? And slack on a steady downtrend. This is precisely how the Fed will interpret this report, even if the numbers here are atrocious, said Eric Green, chief economist at TD Securities in New York. The employment cost index, the broadest measure of labor costs, edged up 0.2% in the second quarter. The Labor Department said that was the smallest gain since the series started in the second quarter of 1982 and followed a 0.7% rise in the first quarter. The weakness is compensation was concentrated in sales, information, and wholesale trade occupations where workers are likely to receive incentive pay, commissions, and bonuses help lift worker compensation at the start of the year. Excluding commissions, compensation was up 0.6% in both the first and second quarters, according to TD Securities. Economists have forecast the employment cost index, widely viewed by policymakers and economists as one of the better measures of labor market slack, rising 0.6% in the second quarter. Now, again, a lot of these numbers are kind of confusing for most people. But, you know, people are asking and basically demanding that they at least get some type of raise. And they're getting it. But only what these companies are willing to come up off of, and it's not usually much. Maybe give them a bonus to kind of give them that little incentive to stick around, stick it out. This is the problem with the Fed messing with things and messing with the free market. Free market would know that you don't raise interest rates just because things have leveled off. That's what it is. It's leveled off. You don't artificially lower them to the point that you create this problem. You don't artificially raise them. And the problem is the free markets never got to intervene in all this. It's trying to be controlled and manipulated, which we already know what it does. You can't predict these things, like Ron Paul said. That's why you have to let the free market deal with it. Okay, give me a second here. Sorry, I have an issue here. Okay. This one is from AMTV. And this is titled, Why the Federal Reserve is Leading Us to War. Christopher Green, AMTV on YouTube.
Hey everybody, I'm Christopher Green. You're tuning into AMTV Alternative Media Television. It is Tuesday, July 28, 2015, and the whore bag that makes up Janet Yellen is meeting today and tomorrow, Tuesday and Wednesday. Now, Chris, what makes her a whore? You see, I've got more respect for the women that dance on tables or around polls because at least they're working honestly for a living. They don't print money out of thin air. They don't play these shenanigans, these money games, courtesy of the Federal Reserve. But the Fed is meeting over the next 2 days to discuss whether or not they're going to raise interest rates, whether or not there will be a 25 bip move or a 50 bip move. And of course, this is all playing into the commodities markets, of which have been crushed in recent months. It hasn't been a rout. Basically, commodities have been murdered. Oil has been whacked. Wheat has been killed. Corn has been destroyed. And it's absolutely amazing how this is playing right into the hands of the agenda that makes up the Saudis, that makes up really the New World Order. In fact, there was, what was his name? The billionaire Weed, if I'm saying his name correctly. I just call him Weed. Weed or whatever his name is. He's going to leave billions of dollars like Buffett does after he dies. He's going to give it to charity or something like that. Said we will never see $100 a barrel of oil again, which I thought was a pretty brazen comment to make a couple of months ago. You know, I can't help but call bullshit on all this. Again, not a single prognosticator told us that oil was going to collapse from its $100 plus level up until now. And now the hedge funds are on it. They're short selling this stuff, just like we saw with the big banks in 2008 and 2009. Some of these companies, if you look at the drillers, for example, I'll pick one company, Chesapeake, a natural gas company, is trading less than half of its book value, around $8.50 a share. I mean, if a company, if it just sold all of its assets today and sold it at auction, you would double your money. The company is at least worth 15 to 20 bucks a share, selling at $8.50 today because of the shenanigans that makes up Wall Street. And what the prognosticators in the media are telling us is a strong dollar. Got a question about this yesterday. Christopher, why is the dollar strengthening? Well, it's strengthening on the hope that they're going to raise interest rates a measly 25 to 50 basis points, even though that is nowhere near normalizing rates. That's not a normal interest rate environment. They would have to move a few full percentage points to normalize interest rates. Again, all of this, all it's doing is creating giant bubbles. And the hedge funds, in the meantime, I wrote about this on Friday. In fact, tune into Facebook. Visit us on Facebook every Friday. I'm doing a little market recap. We've had the hedge funds basically long big tech. We've seen this with Netflix earnings beats. We've seen this with Amazon earnings beats, both up over 10% in after hours last week. In short commodities, it's been long big tech in short commodities. At some point, there's going to be a reversion. Either oil and commodities has to rally back, it has to revert back to the mean. I think fair value for oil, in my opinion, in this current market environment is anywhere from $65 to $75 a barrel, something in that ballpark, or the market where it's valued today, based on future cash flows, has to collapse. So either the S&P 500 and the Dow Jones and the leadership that makes up Wall Street today is going to collapse to the murdered prices that make up the commodity market today, or oil and commodities in general are going to rally to their mean. Something's going to happen. Either way, I think that long-term investments in the oil patch and natural gas with the drillers, you could look at integrateds like ExxonMobil, for example, long-term in either case scenario, I think is a good bet. So when I look at the broad market picture, I see a market that is yet to normalize interest rates and will not normalize interest rates in the future, in my opinion. Ben Bernanke has mentioned this behind closed doors, says we will never normalize interest rates in his lifetime. Based on that environment, based on the environment of bubbles, of course, we've seen this in China with an 8.5% downside move yesterday, something we haven't seen since 2007. I expect, again, a liquidity rush, which is what we've had to artificially support prices until there's some kind of an event, there's some type of collapse, there's some type of black swan, bankruptcies declared, like what we saw with Lehman Brothers and Bear Stearns before the entire financial system, and the wheels basically flew off. And in addition to that, I continue to see a devaluation of our currency here in the United States. Yes, we might be having a short-term rally in the dollar because it's the cleanest of the dirty shirts in the laundry basket, people like Bill Gross have referenced before, but that is not a long-term sustainable trajectory for a currency that's being printed out of thin air. This is also why, in addition to oil and commodities being, I think, very good picks long-term, the precious metals market is also a top pick. Both gold and silver, again, I've talked about this for years now, providing a hedge to all the things we've talked about over the past several years. It's a hedge against financial collapse. It's a hedge against inflation. It's a hedge against these market moves, these unpredictable moves that we've seen. And what people need to understand is that this is uncharted territory. This is unlike anything we've ever seen before in economics, in macroeconomics, and geopolitical relationships with, the Saudis. They're telling us, at least through the mouthpiece that makes it the mainstream media, intentionally creating oversupply to the oil market, for example, to basically bleed the drillers dry here in the United States of America. These negotiating tactics being used by the current incumbent President of the United States, Barack Obama, striking nuke deals with what they propagandized to us for years, over a decade, was our arch enemy in the name of Iran. The Ayatollah sending out a tweet pic last week showing and depicting what looked to be and appeared to be the president with a gun to his head. I mean, I read a poll this morning, a CNN ORC poll, I believe it was. It said an overwhelming majority of Americans actually want Congress to vote against this recent nuke deal. Yet Obama is still aiming to jam this down everybody's throat. So again, all of the macroeconomics that we're talking about here, this financial perspective plays directly into geopolitics. It plays into the new Cold War with Russia. It plays into the Middle East and this new boogeyman created by the CIA called ISIS. It plays into Ukraine. It plays into Saudi Arabia, a country that was once our ally that now we're pissing off, that we're not only drilling here feverishly in the United States of America, but doing business with their enemies overseas. All of this reaching a boiling point. All of this reaching a cataclysm. And it's exactly why the Federal Reserve, the whore bag that makes up Janet Yellen, isn't raising interest rates. It's why they tell us they're going to raise interest rates, but they will never truly intentionally normalize interest rates. At some point, the free market's going to take over. It's going to demand that there's that equilibrium. It's exactly what we've seen in Europe with yields skyrocketing in recent years with the crisis in the pigs nations. What we've recently seen with Greece is just the kick the can down the road strategy, and it all ends badly. The question that you need to ask, we all need to ask, is how long can this continue? In the short run, I think it continues a little bit longer until at least there's the outbreak of war or there's that next systemic event. But I actually think the market's kind of giving us a head fake right now. I think we actually rally into the end of the year. I think personally, if I had to place my bet, I think that commodities will actually revert to the mean. Oil will eventually revert to its $65 to $75 a barrel fair value range. We might get a little bit of a sell-off in the market. But I actually think things get a little stronger before the inevitable, before the event, before that geopolitical movement emerges, before there is that next black swan event. We're seeing this in tech with the leadership. We're seeing this again with the hedge funds, long big tech and short commodities. At some point, like a rubber band that's been wound very, very tightly, it's going to break. I'm Christopher Green. Get this video out everywhere, make it viral, hard-hitting it in your face, and click the link below to support our sponsor. I'm asked all the time what I do to protect my investments.
Okay. Now, he seems to think that there will be that bubble created where things will get better, which it's artificial better, because if they get better, it's because of bubble being created artificially, because things aren't reset, and if they do all these measures, it's going to make it harder for the poverty in the middle class to do anything. It's all artificial. So he seems to think there will be. I don't know. It matters how the chips fall. And I think that's what the Fed's trying to do. But again, it eventually will fall. So playing the game, I just think that it's just giving people false hope. Let's put it that way. Excuse me. Okay. Give me a second here. Pull up some of these articles again. Here's one out of 9news.com. Denver discusses fluoride in public water. Denver, the governor's office and Department of Public Health and Environment proposed all Colorado communities fluoridate their public water supplies. This came after the U.S. Department of Health and Human Services announced new recommendations to lower the levels of fluoride in public water to 0.7 milligrams per liter. The Denver Water Board hosted a public forum to discuss adding fluoride to public water. Wednesday, where several community groups asked Denver to re-examine current policies. Denver water officials said they've been targeting a fluoride concentration of 0.7 milligrams per liter since the level was first proposed in 2011. So they do not expect water treatment techniques to change significantly. Last week, Snowmiss announced it would no longer fluoridate its drinking water. The Colorado dentist told the board he wants to keep the fluoride because it could help reduce cavity rates. And a local member of the board opposed to fluoridated water said he doesn't think it is government's business to medicate the public. If you want to know more about community water fluoridation or would like to leave a comment, Denver Water is still accepting them until August 12th. Go to www.denverwater.org/water quality/water safety/fluoride/ dot or no after fluoride, nothing else. So that article is at 9news.com. There was one important thing in there that one of the people said, and it's something that even European countries that have a lot of this whole world government socialist type attitude, even they understand. Government medicating the public. That is what that is. Well, it's to help reduce, well, if they go, well, to help reduce the flu, we'll just put the flu vaccine in the water supply. And what that does is it absolutely cuts out any supervision and any controlled dosing. People are like, what? What? Controlled dose? When you get a prescription, it tells you take so much. If you really want fluoride that bad, guess what has fluoride in it? Prozac. And that's basically what they're giving you. Maybe not the same amount, but let's think if you have maybe beverage bottlers using city tap water that is fluoridated and they're not removing it. Okay, there you have fluoride in that drink, plus the coffee you make, plus the regular water you drink. And then, well, what if you grow a garden and you water your garden with your tap water? Now your vegetables and things may contain fluoride. I don't know the whole science behind it. Don't quote me on that, but I'm sure that you will find fluoride in those vegetables. The problem we have is it's forced medication and it's not a controlled dose. Not exactly forced, but kind of. It just helps prevent tooth decay, which they don't get into side effects of it. Fluoride has side effects. Ooh, but they didn't tell you that part. Okay, moving on here. a second here. Something we've been talking about that, a lot of people look at it as, kind of sci-fi. This is the future that a lot of people, at least in the mass public, you talk about it, that's kind of movie type stuff. They don't see it as possible with the technology we have, and I think they really are naive. The younger people are kind of naive to where technology really is. The ones that aren't into technology when it comes to hacking or, coding, things like that. People that just use their smartphones and tablets might not actually know the backbones of anything technological. But people that might know about DARPA and Boston Dynamics and know that what the government's kind of creating, what Google's creating, artificial intelligence, maybe not so naive to what's possible. And we've talked about, the iPhones, the fingerprint thing, how, that can be hacked. And we've talked about RFID chips for a long time now. Now you have like the Apple Watch, which they've had Bluetooth watches before, but Apple finally came out with their own. One thing that I've talked about, others have talked about, are implantables. Before you know it, it'll all just be implanted. You can think about it and it'll pop up in your head. Well, it might not be that extreme right off bat, but you make it where it's publicly accepted, it really could be that way. Or you could be controlled by these implants. I want to read this one. This one from Forbes.com. Forget about the Apple Watch. Implantables are coming. That is right, the implantable. In the past decade of tech innovation, connectivity has been the name of the game. Call your friend in the middle of the night in Antarctica, FaceTime with your sister on vacation in India, talk about the movie you saw with friends in London. Anything is possible with the push of a button, and now with the Apple Watch, you can do it all with the twist of a dial. But this is just the beginning of what Silicon Valley is in store for us in the name of connectivity. We are about to enter the next level of high-tech innovation, connecting with yourself. And the most efficient and accurate way to do that is with the next wave of sensor-based smart devices. Those you can implant into your body. It might sound like something you'd see in a science fiction movie. Again, I said that. But my prediction is that in the next 3 or 5 years, implantable devices will become about as normal as wearing the latest watch. The movement into era of implantables is already in full swing with wearables and attachables like Fitbit. These are just the first generations of gadgets that go beyond monitoring and measuring your body movements. Startups like Think are pushing the envelope, and that's THYNC, with their neurosignaling patch that uses low voltage electrical currents to alter a person's mood and energy. News of Google's smart contact lens has the tech industry excited to see how they might monitor a person's glucose levels or other vital signals with the technology. And these are just the daily applications. Developments in the world of healthcare are reaching new heights. Some devices are not only preventative, they can also improve conditions and even save lives. A startup out of Silmar, California, has developed a bionic eye or retinal implant that allows the blind to see. Companies like Proteus Digital Health are working on implantable smart pills. These smart pills work with Bluetooth to inform doctors and family members if patients haven't taken his or her medicine. The problem of adherence, patients not taking their medicine as prescribed, costs the country nearly $300 billion annually, according to the Centers for Disease Control. Smart pills could help save lives, but they could also save money. That's smart business, and it's only the beginning. The federal government has also jumped on the bandwagon in support of new scientific discoveries. The White House's BRAIN initiative pulled together over $300 million in funding for technology firms, academic institutions, and scientists to better understand the human mind and affect it. They aim to find treatments for Alzheimer's, schizophrenia, autism, depression, and more. New brain implantables that use a wireless remote control to deliver drugs and light are already in the testing process. One such interface, the Batali Neuralife, and you look at it, looks like it's saying battle. Just that name. It just, the moment you look at it, you battle. Batali Neuralife is designed to let the brain bypass the spinal cord. The smaller than a pea-sized chip was recently implanted into a quadriplegic's brain. The device interprets his brain signals and works with a electrode stimulation sleeve that helps the patient move muscles. Implantables can save lives, improve health, prevent disease, and even begin to make us superhuman. But with all great opportunities also comes increased risks and potential for harm. With implantables, the stakes are high. The data collected with implantable devices is so personal, so the risk of hacking puts everyone associated with your business, investors, buyers, and other businesses, on edge. In order to massage their fears and prevent harm, security at every level must be airtight. Further, implantables require tremendous quality and safety controls to prevent a whole range of potential harm. Now, let me throw another potential harm up there that this article doesn't go into, but you can check it out at Forbes.com. What about the potential harm for them making the security so tight that even if you are really good at technology, unless you went to some specialty school and have or are a super genius, you can't gain control over something that has control over you. Meaning, well, yeah, maybe hackers aren't hacking your body, but government has control and can, well, shut you down if they felt like it, or release things into your blood system to make you forget or black out, or you never know. This pits all kinds of things on the table that really should scare a lot of people. But it's coming, and whether people accept it or not, I think is one of the main things that we're going to have to look at. Okay. Okay. I'm going to play one here from Adam Kokesh. First off, he has one that he posted 4 days ago. Kokesh defends self in court, avoids jail. Another one, how to have fun with the GPS ankle bracelet. And the last one is video evidence of probation officer verbally committing, where is it? There. Verbally committing perjury to send me back to jail. First, I'm going to play this one. Kokesh defends self in court, avoids jail.
This is Adam Kokesh here at the D.C. Superior Courthouse in Washington, D.C. I know what you're thinking. Adam, aren't you banned in D.C.? Yes. However, I'm allowed to show up for, court dates and things like that. And I had a show cause for a probation status hearing here today with Judge Patricia Broderick. Went, I suppose, as well as could be expected since I'm not in jail right now. But I do have another probation hearing coming up on August 3rd, so wish me luck with that. They've got me on all sorts of various technical violations of probation that obviously, I haven't broken any laws, I haven't gone to jail, I haven't been arrested, I haven't had any run-ins with the law, at least myself, since being on probation for a year and a half now. But I also want to say about our little run-in with the law last week, which was really Macy's run-in with the law. That's right, she's right here.
Hi.
She got her first failure to comply in a traffic stop, and we had our trailer impounded, and we put out a call right away for help. And I got to say, it was amazing to see the response. We operate on a shoestring here. We put everything we can into this tour, into passing out books and stickers and getting the message out for free. If you haven't read the book yet, thefreedomline.com. And by the way, if I do go to jail, I want you to know that the most important thing that you can do to help me is read the book and get other people to read the book. That's right, freedom at thefreedomline.com. So, we talk a lot about moving forward to a free society, waiting for government to get out of the way, all the different political things that we can do to make people more free. But what's really happening here is so much more beautiful to see that, at a more fundamental level, we are building the free society and the communities around people who believe in freedom, who are willing to put their lives on the line for this cause. And, when we ran into our trouble last week and our home was stolen and impounded, it was really just beautiful to see that this free society is alive and well and flourishing here, especially with people in the United States and around the world who support me and Macy and what we're doing with the Freedom Line. So thank you very much. Thank you for being a part of it. We love you. If it didn't happen, if we didn't have this community, we'd still be homeless. Fortunately, it only lasted 3 nights, but we're back on our feet now, back on the road. And don't forget to check out our upcoming tour dates on the schedule in the description below. And if you want to contribute to help us keep spreading the message, we greatly appreciate it. Go to thefreedomline.com, click on donate, and click on Campfire Tour for all of our upcoming tour dates.
Okay. Now, we have one that he posted 9 hours ago. I'm not going to play the one how to have fun with GPS ankle bracelet, but check it out if you want at Adam Kokesh on YouTube. But I'm going to play this one. Video evidence of probation officer verbally committing perjury to send me back to jail. And it says here, on January 17th, 2014, I was sentenced to 2 years supervised probation plus 4 months time served. I was also banned in D.C., so I would have to report to a probation officer in California, Judge Broderick also granted permission to travel for work. In California, Officer Bertley explained that I would only need to inform him if I was traveling for work, but get permission for personal travel. At his, as his records show, give me a second here. As his records will show, I left LA County numerous times before leaving for the American Campfire Freedom Tour in April, and only rarely was given a permission slip, as most travel was for work. Before we began fundraising in October, I notified Officer Bertley of our plans. He said it would not be a problem, otherwise we would not have begun making commitments. I kept him updated of our plans every meeting, including the one you're about to see in his report to the D.C. Probation Office. He claims that I absconded from my probation. And here comes the clip.
So the books are in.
Okay.
Second printing. And of course, I have this for you with my X number on it. It's first piece of good news.
Okay.
Second piece of good news, I had to renew my marijuana referral. So I brought it in. You can have a copy of that. And I have, because the books are in, we're ready to go on the tour, and you won't have to deal with me for the next 5.5 months. And I have names and dates.
5.5 months.
And I have names and dates and addresses for you.
5.5 months.
Just, you know, what I told you about last time that I didn't have, but was waiting for the books to be able to put together. So those are the places we're going to be based out of, and it's all driving, so it's really easy for you, paper-wise. It's just the addresses where we're going to be, and we're going to be hitting those areas and then coming back end of September.
Can I make copies of this stuff?
I figured you'd have to type it all into a form anyway. If you like, I could actually.
The issue is you're going to be out of supervision for a very long period.
Well, I figured there'd be some way for me to check in with someone else, or do a P test on the road every now and then.
You have to get some sort of clarification from your state. I don't have the authority to do this on my own.
Okay. Well, it's just travel for work. It's all very specific.
No, I understand that, but see, you're going to be not showing up for 5 months.
Well, I can come back intermittently if I absolutely have to. Understand, but
On April 9th.
Yes, sir.
Okay. And you have any kind of?
Oh, and I left a check with.
Did you really finally? Glad I'm sitting.
It wasn't for much. I need to get out and make some money. This is how we do it. We go out and sell books and sell T-shirts.
Did she buy one?
I gave her one.
Speaking of which,
I'm sure she'll make a donation later.
Speaking of which, an interesting thing happened when you left here last time around.
Yeah, I was threatened by one of the officers. Did you see the video?
I tried getting on a couple times. For some reason, I wasn't able to see anything. I heard audio.
Oh, I was considering. You got on YouTube and heard the audio, but didn't see the video?
Yeah.
Oh.
I did see some other stuff though.
I was considering pressing charges against him for threatening me inappropriately with under Section 242 or Section 18. Title 18, Section 242, color of law.
Mm-hmm.
When any government agent makes a threat under the color of law saying, like, Like for a cop to say, "Hey, if you don't suck my dick, I'm going to give you a speeding ticket."
I see.
When you subjectify the law like that, if you don't know what the law is and you threaten someone, you're allowed to lie as an officer to get information, but you're not allowed to threaten someone, and that's what he did to me. And if you got even from the audio,
Could I
Your other two cases are
clarify a little?
he said that if you record me as an officer in public, I am going to arrest you and press charges against you, which is illegal, which would have been illegal for him to do, and the threat of which is arguably also illegal. Trying to make money making my YouTube videos. It's out there interviewing people.
Anyone's experience?
Well, no, I was just talking. We're hoping to talk to just people going in and out for like traffic court and stuff. And then we got confronted and thought that was a more interesting video. I've done this before. If you go back, I've done it in chats where.
I'm quite aware of that.
Yes, because the commission of the offense occurred while you were on formal probation for those two cases.
Well, I do it to provoke conversation. Reaction is a nice side effect sometimes.
Yeah, well, it's one that you look for.
Well, no, I really don't. I really go look to challenge the way people think. And if people say, "Wow, I've taken on a new way of thinking," then that's a better form of drama than a negative reaction.
That's true. It might even be interesting if you want.
That's fine. You're admitting the truth because you don't remember.
I can't talk to people on the street when I'm on probation.
There's this thing called what's appropriate and what isn't appropriate.
Okay.
I think the cop was extremely inappropriate, Officer Whitfield. And if it's helpful to you, I'd be happy to file charges against him. If it makes
it would be helpful to me, you would file charges against him?
They're on probation.
I mean, theoretically.
Probation cases. The court always.
Well, no, I mean, I'm really like, it's one of those things where when you know how it is when a cop breaks the law, it's very, very difficult for them to be held accountable.
We've done a lot of that lately, but that's a whole other issue.
You ever have any cops or former cops on probation here?
Because they know you're coming back and forth to court. You're not a flight risk. So
not that I'm aware of.
Not
me personally.
Yeah, because they usually, they don't have to deal with that. It's only for us, please.
Some celebrities here under the high-profile case law. Can't mention any names, but they're always amusing to listen to.
Or you got me on the medium to low-profile celebrity level.
Well, I'm sure that'll all change with this tour.
No, this is just one more level, one more leveling up. But it is going out and talking to our, our hardcore supporters, people who have paid for good deliveries. So we have to go make good on our commitments.
Let's just say that in terms of this, what happened last time, given the circumstances, given the fact that you're on probation and you're being supervised in this office, which is located in this court building, it really doesn't help the case either personally or professionally.
To do what?
If you get stopped and questioned.
Well, I can't help if a cop is going to break the law. I mean, you can't put that on me.
I'm talking about what you do when you're in the community, particularly in the same building where you're being supervised.
Just talking to people like on the street?
Now you're trying to play me as a fool.
Well, no, I mean, you know what I do. So if cops want to interfere with what I do, like as my job, as,
as savior of the universe.
Entertainer, infotainer. Like,
savior. That's great.
If you say so.
I think so, just based on everything.
So you've read the book?
That's your grant date.
I've browsed through it.
The
awesome.
Case number, you ready? Is SA0.
You're not the first.
885.
You're the last. And I'm not saying I agree or disagree.
859.
But, there's a whole bunch of information. And depending on what you already believe in, what you already know to be the truth as far as you know. You can take any amount of data and bend it any way, shape, or form to manifest what it is you already believe in. And I'm not saying it's good. I'm not saying it's bad.
It's just how humans interpret the world.
Yes.
So these cases, okay.
And,
So
right now,
if the commission of the offense
on the toilet,
in the new matter that you're in court on is
So how are
during
you?
that period of time, then yes, you are in violation
Excellent.
of probation.
Good.
You were
Excellent.
on former probation at that time. If
What else is going on?
well, you'll be found in violation.
Got a great girlfriend. Things are going very well with her.
However, in this case, these offenses, these cases are
From this
possibly
area?
removable under Prop 47.
No, I got her. Remember on the last
Both of them.
big trip I took for work when I was in Wisconsin, I picked her up there.
Ooh.
Yeah.
Oh, okay.
And I was in Details magazine this month. You know Details magazine? It's one of the major men's magazines in this country.
Well, I guess I'm on the look.
They did a cool profile on me. It's
subject matter.
Excuse me, it's a men's magazine, like general health, fitness, career, grooming, fashion, you know, men's interest kind of stuff.
Monthly or weekly?
It's a monthly. The stuff like, it's read by mostly under 30 professional men, but also like a younger crowd. And it's the kind of thing a lot of guys stop reading when they graduate college, you know.
Oh, I see. Used to be Catcher in the Rye, now it's Detail magazine.
Yeah, right. Or Maxim Maxim's more like high school level, and like Details is like college. And then if you're still reading Details when you're 50, it's like, maybe things didn't quite come together, but you know, it's a good publication. It was good exposure for us. So.
Okay.
Other than that, things are just rock and roll and coming together.
All right.
And we're just relieved to have this finally, you know, with some real dates and locations for it. Because like I said, we were waiting to have the books so that we knew we could take off and do this.
The book, or is it revised? Is it new?
Just only slightly. It's a second edition, but it's not like, it's just window dressing stuff.
Okay. I'm going to ask you, I know you have sent something before. I'm not sure what became of it. I recall that it wasn't considered enough proof of your actual new address. Could I impose on you to?
I can send you something. I have that, and I have my driver's license.
You have what? This?
Yeah. But we're actually not there anymore. It's just all I have is my legal PO box now, because we're going to be driving in the RV trailer for the next 5.5 months.
Good God, son of these, I could violate you on this. It's unbelievable. So there is no.
Hey, sir, if I may say, you don't want me to film at the courthouse anymore? Yeah, it's cool. All you gotta do is ask. Like, hey, please don't film at the courthouse anymore.
I didn't know until after the fact.
I know. Well, just if that's your request and it's one less thing for you to worry about, hey, totally cool. I'm not trying to get away with anything. I'm trying to put my business back together. I'm trying to make some money. You know, my understanding is this is all above board. This is all straightforward. And if it's not, you know, let me know what I got to do.
Fair enough.
I mean, even out here, I'm not trying to get away with anything. And if it's an inconvenience, I don't need to make your job any more difficult than it is. If you can make sure that
it already is.
I mean, if you make it possible for me to do my job,
on the surface, that sounds more reasonable.
I'm happy to do you whatever favors it takes to make your job easier.
Okay.
And if it's giving up one place to shoot, I'll give it up. You know, I'll go back to the Chatsworth courthouse and bug people there.
No comment. So, you were going to have just a mailbox?
Yeah.
But
well,
if you're going to be on the road, then who would be picking up mail delivered to the mailbox?
It's just going to pile up for 5.5 months.
That's what I was afraid of.
I can have someone check it if you need me to say
Well, see,
we can receive mail there. I can have one of my business partners check it, and I can say, hey, I'm getting mail here.
The bottom line is I'm going to need to get some sort of confirmation.
You know what? There's one thing I left off of this form this time, and it's my boss's phone number. If you want, I'll put it on there, and you can give him a call right now.
You have a boss?
Says here, abscond, verb to depart in a sudden and secret manner, especially to avoid capture and legal prosecution. Clearly, this was not the case, and our schedule has been publicly available on our website. He claims that he attempted to contact me, but I received no communication from him by phone, text, email, or mail. His report states the matter was only verbally discussed. As you just saw, I provided him with a written list of names, phone numbers, and addresses where I would be staying. At no point did he inform me verbally or in writing that there was any reason I was not allowed to make this trip. He stated, Mr. Kokesh has provided two separate addresses as his permanent residence. As you just heard, this is not the case, as it was made clear to him that while on tour I would only be keeping a P.O. box in California. However, all of this did not stop him from playing ignorant and wasting two other officers' time by sending them to check the addresses. As was later discovered on 6/29/2015, one of those addresses proved to be an unoccupied apartment that was being renovated, while the second was a mini mall. His report recommends that I go back to jail for my violations. As a result, I am now wearing an ankle bracelet and facing a court hearing on Monday where I must convince Judge Broderick not to send me to jail. If it wasn't for this video, we would have one more government official getting away with abusing his power and running someone's life to cover up his incompetence. While I do not believe there is a political or personal motivation here, I've been routinely criticized for my political beliefs by multiple probation officers and endured many inappropriate questions regarding my mental health and combat experience. In the follow-up report from Officer Kevin Jackson of the D.C. Probation Office, he stated, the offender's overall adjustment is poor. Mr. Kokesh appears to be in the relapse stage of change in terms of his supervision due to him absconding. His barriers appear to be his anti-authority rhetoric and behavior, criminal history, and mental health history. At this time, his current location is unknown. This community supervision officer concludes that the offender poses a high risk for community supervision because the officer has absconded from supervision, or the offender has absconded from supervision and has a history of possessing firearms. Therefore, this community supervision officer is respectfully requesting a show cause hearing where revocation will be requested. And that was the end of that. Adam Kokesh on YouTube, freedomline.com. Now, we know that if you've ever had friends or anybody that you've known, family, that's been on some type of probation, a lot of times for petty crimes, that it seems even when they're doing everything right, they get pinned for something really, really minor. Somehow that little minor thing turns into either more jail time or, oh, we'll throw another year of probation on there. Well, guess what? These people were actually helping others out that have committed crimes to put them back into the community. They'd be out of a job. Not really, but you know how much money when they keep setting the terms of probation or putting people back in jail and then have to come out on probation again? You know, there's a lot of people that I've met throughout the years, and you know, they've talked about it, and the ones that have a pretty decent life haven't really been back. One thing that they've done is when they originally took probation or something and then got reoffended for really something minor, and instead of coming back out on probation, they have to serve their time. Now, a lot of people might not be in that situation. Like, I have to get out of here as soon as possible, therefore I can work. I'll lose my job. Or people are like, I'm probably going to lose my job anyways. Well, let me do my time and just be done with it all. So they come out without probation. They do their time and they just come out. Well, there's probably a good reason for that, and that's because, well, they can't be reoffended as easy unless they're being targeted. Now, most people are going to want to say, you know, screw that, I'm going to come out. Well, I guess it matters also how much time you're supposed to serve. But a lot of times I've just seen people reoffended for really the dumbest things, and you know, it baffles my mind how they can just, well, that's because people look at them just as criminals. They look at them just as the robbers, the rapists, the thieves, you know. Actually, that guy got laid off, got drunk, got caught, went to jail. Judge was pissed, gave him kind of the max of what she could. Now he's stuck on probation and having to take classes. Never got drunk or anything before in his life. at least, to the point that he couldn't make a good decision. I've seen people get drunk and know that they can't drive. They're pretty buzzed up. But you get super slammed, you ain't doing anything that makes sense. You look at them the same as the robber and the rapist and the murderers. Therefore, there's not a lot of people standing up for those that are trying to do right. Even if it is a thief, maybe he fell upon hard times, thought, this was the only way, made a idiot decision, but he really wants to do good with his life, and you have a system that is profiting off of him, and they want to keep him on the payroll base, or keep him as a paying customer, a forced paying customer. And we wonder why we have a lot of reoffenders. Because they get caught in a system that won't let go of them, and they're just like, screw it. I'm going to do whatever the hell I want. I'm tired. And, I want to cover one thing before I go. Since we were kind of talking about the Federal Reserve, well, one of its hands is the IRS, this one from Truth and Media. And this is kind of another side of the government and the court systems. Truthandmedia.com, he beat the IRS in court, but they still won't make him whole. The law requires government compensate innocent victims of asset forfeiture, but the IRS refused to obey. By George Lee, truthandmedia.com, one of the most horrent current government practices is civil asset forfeiture. Turning the usual rules of due process upside down, asset forfeiture enables local, state, or federal authorities to confiscate money and property from individuals merely on suspicion that the property was somehow involved in a criminal activity. Once the property has been taken, it is necessary for the owner to go to court and prove his property's innocence, or else lose it forever. Only by enduring often protracted and costly legal proceedings can the person recover the seized property. Many innocent people just can't fight the system and lose out entirely. Others settle with the government, getting back a fraction of what was taken from them. These seizures are highly lucrative for government bodies. Many police forces pad their budgets considerably with the proceeds from asset forfeitures. In one of its worst decisions of the last century, tough competition, the Supreme Court gave its blessing to civil asset forfeiture in Bennis versus Michigan. Former FEE President Don Baldricks and law professor Adam Pritchard give a sharp analysis of the appalling 96 decision here. Several years after Bennis, Congress passed the Civil Asset Forfeiture Reform Act of 2000, recognizing that these seizures were often wrongful and imposed unjust costs on people. The law provides the recovery of fees, costs, and interest by the prevailing party. Despite the clear intention to make people who have been harmed by unjustified seizures whole, the authorities often try to avoid paying people the rather small amounts of money they are entitled. This churlish attitude is displayed in the ongoing case of Lyndon McClellan, the owner of a small convenience store in rural North Carolina. In July 2014, IRS agents seized McKellen's entire bank account with $107,702.66 in it. The reason for the seizure, the Feds thought his frequent bank transactions involving cash amounts of just under 10 looked suspicious. He might be structuring his transactions to avoid the requirement of reporting transactions of 10,000. That was enough for the IRS, and without any effort to find out why McClellan made these transactions or how he derived the funds, it took his money. Lyndon was not about just wave goodbye to his life savings. However, he retained an attorney and paid an accountant to try to prove that he had done nothing wrong and should get his money back with their help and an enormous pro bono assist from the Institute for Justice. The government has agreed to return all of his money for about this outrageous case. See Forbes article. But the government is still trying to avoid making McClellan whole under CAFRA. When the U.S. attorney handling the case offered to return the money, he also tried to get him to sign a document waiving his rights to pursue full recompense. His lost interest and expense for legal and accounting help. Lyndon declined to sign that document. So the next day, the U.S. attorney entered a motion in court to dismiss the case, officially named United States of America versus $107,702.66 in United States currency seized from Lumber Guarantee Bank account number, blah, 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 without prejudice. When a case is dismissed without prejudice by a court, the government is reserving the right to reopen it at a future time. In other words, it is really conceding defeat, but declaring that the case is still technically open. Asking that the case be dismissed without prejudice might seem strange here because the government changed its policy last year. The IRS has officially abandoned the policy of seizing bank accounts unless it has evidence of criminal activity, forecloses any reopening of it. And it goes on, but the government not wanting to pay interest? Well, of course not. They're about taking your money, not giving you money back. Remember, if they're going to give you money, that means they're going to end up taking more from you or taking more of your freedom. And why would they want to have it thrown out without prejudice? It's kind of a toss-up what they want to do. But it says here, all but they're in a method in this madness. A number of similar cases, the government has argued that because the seizure case was dismissed without prejudice, the plaintiff does not count as a prevailing party under CAFRA and therefore is not entitled to full recompense. So you can read the full article. His attorney hit back, Rob Johnson from Institute for Justice, basically writing that they're trying to evade statutory obligations. And again, you can read the rest of it at truthandmedia.com. And the title of that, he beat the IRS in court, but they still won't make him whole. And we have this problem with government. They never make you whole because they have to make a profit off of you. They have to pay themselves. And then they also look at it as, well, I have power, I have an opportunity to make money off of this. And they do. Thank you all for tuning in. Stay tuned here on UCY.tv for all the great broadcasts coming up next. Have a great weekend.